Yeah. So we were talking uh, today we are going to start the investment management or fundamental of investment, especially the chapter number 5 and chapter number 7. It is basically a face video for these two chapters. Why I am making this face video? Because before learning these chapters, theory and practical of these chapters, we have to understand the concept of these chapters. First of all, the weightage. The weightage of these two chapters are very important for this subject because for investment management and fundamental of investment, maximum practical questions are there. So weightage of these two chapters subjects to this syllabus is almost 50%. And as we have earlier we have also discussed that if you go through this complete syllabus, apart from these two chapters, we have two more chapters. One is risk and return, one is portfolio management, and one is mutual fund. Some practical questions are going to come from there. But most of the part, almost 50% of the questions of this syllabus of practical questions comes from these chapters. And it has been seen for the students of investment management and fundamental of investment syllabus that they mostly fear from these two chapters because they feel that the chapters are very lengthy and the chapters are very tough. It contains a lot of practical questions and it is very hard to solve these questions. They feel in this way actually. But again, I am telling you, what is the objective of making this face video? We want to remove your hitch, which a fear which has been created for these chapters in your mind. First of all, we want to remove this. Now, for this understanding of these two chapters, I'll first tell you that if you understand that concept, and if you go and see the background of these chapters, what is happening, a lot of time we see anything from the front and we make a perception of any people, of any chapter, of any subject, of any syllabus. We make a perception that no, it's very tough. It's very tough to do. It's very tough to solve the questions actually. We make a perception in mind. And once the perception has been created in our mind, whenever we want to remove those perceptions, like whenever we start those chapters, immediately from the subconscious mind, the perceptions come first. That no, it's very tough. No, it's very tough. It's very difficult to do actually. And like that we are not able to do those chapters. We are able to do those chapters, but because that perception has been made in your subconscious mind, whenever we start those chapters, we find it very difficult. We get a lot of stuck. Something like we have a road and we are like driving a vehicle and we have like 10 red lights. Like if somebody start from Karkaduma or somebody start from the Vikas Marg, the first point, and if he wants to go to ITO, so he knows that okay fine, from that point to ITO it has got 12 red lights or 15 red lights. So immediately they got stuck that 15 red lights. Oh my god, it's very hectic, and if we get every red signals on the red light, it is going to take double or triple time actually. वो एक perception बन जाता है और वो परसेप्शन क्या करता है कि जब भी आप उस चैप्टर्स को, व्हेनेवर यू स्टार्ट द चैप्टर्स, वो रेड लाइट की तरह क्या होता है कि आप स्टार्ट करते हैं, यू गेट स्टक, देन अगेन यू स्टार्ट, यू गेट स्टक, एंड बिकॉज ऑफ दैट रीजन इट टेक्स लॉट ऑफ टाइम. सो व्हाट वी ट्राई टू डू इज दैट कि ऐसी सिचुएशंस जब भी बनती है, ऐसी जब भी प्रॉब्लम्स अराइज होती है, what you can do is that you first go and have a look of the background story of those chapters. And if you learn, and you have already learned it actually, if you go and understand the background story of those chapters, something like we call in homeopathy, or we call in Ayurveda, or we call in Unani, that कि उनका आप कोई भी आप प्रोग्राम देख लें जो टीवी पे उनके आते हैं डॉक्टर्स के, वो ऑलवेज कहते हैं कि हम जो है कोई भी प्रॉब्लम्स की जड़ पे जाते हैं. मतलब अगर किसी को डायबिटीज का प्रॉब्लम सॉल्व करना है, उनका ब्लड प्रेशर का प्रॉब्लम सॉल्व करना है, तो उनका वेट कम करें आप. अगर वेट कम करेंगे तो ऑटोमेटिक बीपी की प्रॉब्लम कम हो जाएगी, डायबिटीज की प्रॉब्लम कम हो जाएगी, बॉडी में इंसुलिन बनने लगेगा, फाइन. और प्रॉपर तरीके से जो शुगर है वो बाइफर्केट होना शुरू होगा, बॉडी में यूज होना शुरू होगा, तो ऑटोमेटिक उसकी डायबिटीज कम होगी. बट इफ यू गो टू एलोपैथी, 99% of allopathic doctors never go to solve from the background, from their roots actually. Fine. What you do, you just ask about a problem that you have got sugar, they will write one medicine. So there is BP, you will write one medicine. You will say that I have got some pain in my leg, they will write one medicine. I have got gas, they will write one medicine. I have got this thing, will develop. So they will keep writing on medicine. अब कभी कभी तो like the patient is becoming so irritated that okay fine, one medicine, two medicines, three medicines we can take, but they write 9-10 medicines, fine, and it become a bunch of medicines, and then you make scheduling of the medicines, you make boxing of the medicines, and then it has become a duty for you that you properly remember those things, and you take you take the right medicine in the morning at right time, then you take the right medicine at the lunch time, and 99% they never go to root unless or until it is Caesarean kind of work actually. तो वही प्रॉब्लम देखिए यहाँ पर भी है कि आपको रूट्स को समझना है. आपको किसी चैप्टर्स में अगर ज्यादा प्रॉब्लम आ रही है तो यू जस्ट ट्राई टू अंडरस्टैंड द रूट्स ऑफ दो चैप्टर्स. जैसे लेट अस टॉक एग्जांपल ऑफ द रिस्क एंड रिटर्न, and you are finding a lot of problems for solving the questions of the risk and return. So you know that you need to calculate the mean, you need to calculate the expected return. Now you need to calculate the risk, that is the standard deviation, and these are the basically taught in the statistics, fine. So then it is better to first, if you're finding it problem, that you find some time, and you have already studied the statistics, but you might have forgotten it actually, the things that might have been skipped from your mind. So it is better, what you should do is that you take the book of the statistics and revise the chapter of the mean and revise the chapter of the standard deviation and finish. You will be able to understand very easily the concept of risk and return. And if you understand the concept of the risk and return, it will help you in solving the questions in the portfolio management also. And there also we have the combined standard deviation, we have the combined mean, we have the weighted mean, we have the weighted standard deviation. So again those formulas we can revise from those basic chapters. So always go and see the background chapter and the roots of the concept of those chapters. Now let us come to the point. What actually I want to discuss with you. In fact, the roots of these chapters, after explaining this message through this video, you will find that these two chapters, whatever the kind of fear has been made in your mind, you will realize that, oh my God, after watching this video, you will come to a conclusion, oh my God, I was finding it very difficult, but it's so easy. And I have already learned the most of the concept of the with some previous syllabus actually. And I was having in mind, I made a perception that these two chapters are quite tough, but oh my God, it is very easy actually. Huh? Okay, so first we'll go to the background. What is the background? The background of investment management is financial management. Now, financial management syllabus, if we go and talk about SOL syllabus, financial management and investment management in owner's syllabus, they have kept it in one group actually. Means you have to study the financial management and then you have to study the investment management. Okay, financial management, investment management together. Now what we do in that situation, we always teach first the financial management, and especially the background chapter of the investment management, that is the cost of capital. And we always suggest that to the student that first you complete the chapter called cost of capital, and then my dear you go and take up the chapters of investment management, especially these chapters, the chapter number 5, the fixed income securities, yield and valuation, and the chapter number 7 where we talk about the valuation of equity shares. Now we come to the regular student. In regular student, they have semester wise breakup. In SOL BCom program, there is no syllabus of investment management, so this video is not meant for them. Now when we talk about the syllabus of the regular student, they have broken down. Now in SOL also it has been broken down actually, but now like in SOL we have completed only 1 year, so we have got the student for the first semester and second semester only, and the student of the semester 3rd and 4th and 5th and 6th are yet to come. But in SOL also, in the semester syllabus, CBCS syllabus, they have mostly made the syllabus equivalent to the regular. They have mostly made the pattern and everything equivalent to the regular, and it is good also. Okay, it's not good that learning two syllabus for two different stream of the same university. It's not required. So they took a very good decision, and they have, like, I support the semester system of this SOL syllabus actually. Now what is happening for the regular student? Regular students are studying the financial management in the previous semester, I believe. So you've already studied it, and might have been a lot of concept might have been eroded from your mind. Okay, that might have happened actually. Okay, fine. Now let us come to the syllabus called financial management. And what is the background of these two chapters? Which chapter is the background chapter for these two chapters? The background chapter of these two chapters is cost of capital. Do you remember cost of capital? Cost of capital was once again one of the most important chapter in the financial management. So have you studied properly? Do you remember the chapter? Cost of capital? Do you remember? Yeah. The cost of capital chapter is a background chapter for these two chapters. Now let us discuss what we used to do in the cost of capital chapter. We'll do it in the practical aspect also. We'll just again recall that chapter's concept also. Don't worry, please. So what we used to do in the cost of capital, if you remember what we used to do, we used to calculate the cost of capital of our financing. And what was the mode of the financing in a professional world, in the corporate world? In the corporate world, the mode of financing was we were financing through equity shares, we were financing through the preference shares, we were financing through the debenture, we were financing through the loans, we were financing through the equity shares. Mind it. We are financing through the loans. Now, you just divide in two parts. In the one part of financing, we used to pay the fixed cost, like for preference shares, for debentures, for bond, for loan. we used to pay fixed interest to those investors. And for equity shares, we used to pay them the variable return in the form of dividend. Now, if you again recall it, when we started the cost of capital, we first studied the cost of bond. So cost of bond, the bond and the debenture and the loan, they have got the same nature of financing. You take borrowings from the banks, it's called loan. You take the borrowings from the debentures from the public. You take you issue the bond. It's like again one kind of borrowing. You can issue to the public also. You can issue to the institution also. For you can issue to the institutional investors. Fine. So their natures are same. Their formation of like a loan, and we pay them. Definitely there might be secured, unsecured. That's a different issue. But we pay them the fixed interest. So we used to pay them the fixed interest. We used to get the tax benefit on payment of that interest because it was allowed as per the taxation rule. Fine. The interest was deductible out as our business expenditure. So we used to get the tax benefit on that. So what we used to do, first we calculated the cost of the bond. And while calculating the cost of the bond, what we did, we divided the bond into two forms: redeemable bond, irredeemable bond, redeemable debenture, irredeemable debenture, redeemable loan, irredeemable loan. And then we calculated first for cost of the irredeemable bond, the cost of the irredeemable debenture. And while calculating that, we used to take few factors into consideration. We used to take the factor, the percentage of the interest paid. We used to take the rate of the taxation, how much taxation rates are there. Then we used to take the issue value, and while calculating the issue value, if you remember, that is B0. So we used to take, what was the formula? The formula was interest 1 minus tax upon B0. So we took the interest from the rate of interest. We took the T tax from the tax rate, and we used to take the value of B0. The value of B0 was the issue value. And how we used to get the issue value? We used to get the issue value through the face value minus the discount plus the security premium minus the flotation cost. Yaad aa raha hai? Are you able to remember? Are you able to remember? Yeah. And through that we used to calculate the cost of irredeemable bond. Then we used to calculate the cost of redeemable bond. For that we used to take the issue value like B0. We used to take the redeemable value. We used to take the interest of different years. We used to take the tax rate. Then we used to discount it. Are you able to remember? We used to discount it. We used to see the present value table. We used to see the present value entry table. We used to take the factor from those tables, and we used to discount it. And after calculating all those things, we used to calculate the cost of the redeemable bond. Then in redemption, we were having redemption at the end of the life, redemption in installment. Picture clear हो रहा है? दिमाग में आ रहा है वो बात? Okay, fine. You don't have much time to again take out the financial management book and study the cost of capital. But again, I'll tell you, if you have the financial management with you, if you have not sold that financial management book, or if you have sold the book, and if you can get PDF of this cost of capital, you can download it. Or if anybody who is having the financial management book, you can tell them that do the scanning through CAM scanner, fine, of this chapter and send it to me. And give some 2 hours time or 4 hours time or 5 hours time and revise that chapter. I am making you damn sure whatever the 5 hours you are going to give for the revision of that chapter, it will smoothen the concept of your chapter number 5 and chapter number 7 in investment management. And like if you spend 5 hours there, you can save 10 hours here, and the concept will like become smooth like a makhan, butter. एकदम smoothly mind में एकदम settle हो जाएगा. So if you find some time and you can spare 5 hours, get the material back and revise the cost of capital chapter, and it will become very easy for you. Then again, we used to calculate, if you remember, cost of the preferential capital. What we used to do in the cost of preferential capital? The interest part was not there, and it was made easy that in preferential also we are having the irredeemable preference share, then we are having the redeemable preference share, and for irredeemable preference share we used to pay preferential dividend, and we used to take the same formula, the cost of P, KP is equal to PD1 preferential dividend 1 upon the P0, that is the issue value. Do you remember? And again for redeemable one, there we were having we used to make table, and we were having the two concept, redeemable at the end of the life, and then we were having redeemable at in the regular interval. And again we used to take the factor from the table, from the present value table and from the present value annuity table, and we used to incorporate there, and we used to solve that question, and we used to find out the KP. Got it? Now we come about the cost of equity shares. What we used to do for the cost of equity shares, my dear? We were having a lot of method for the cost of equity shares. We are having the first method about again discounting the dividend and the sales value. Then we were having so many different methods for calculation of KE, cost of equity. We were having one method was very important called CAPM. CAPM, we used to calculate the cost of equity through the CAPM. Then we used to calculate the cost of equity through zero growth model. You remember the formula? KE is equal to D1, dividend at the rate of first year, upon the P0 into 100. Do you remember that? And we used to calculate the cost of equity through growth formula, D1 upon P0 into Z. My God. So we used these 3 to 4 formulas to calculate cost of equity. And after calculation of cost of bond individually, don't need to calculate separately the cost of debenture and cost of loan, because the nature and characteristic and their payment process and their tax benefit, and for the debentures and loans. So if you calculate for the bond, same will be applied for the debenture, same will be applied for the loan. Right? And preference shares become very easy because the 1 minus T is removed. There is no tax benefit. So that maybe आपको realize हुआ था कि oh my God, calculation of this cost of preference share has become very easy. It's become very easy compared to cost of bond. And then we used to calculate the cost of equity, right? After calculation of the cost of bond and cost of preference share and cost of equity, what we used to do? We used to calculate the weighted average cost of capital. So we used to calculate the individual cost of capital, we used to take their weightage, and then we used to calculate the WACC. It was known as weighted average cost of capital. Remember? Then we used to calculate for the honor assessment WAMCC, weighted average marginal cost of capital. Yeah. So that is the chapter you need to revise before studying the chapter number 5 and chapter number 7. Got it? Now let us come that what is the link? You have to understand the link. You understand the background chapter. Now you have these 2 chapters in front of you. Then you have to understand what is the linking. Because if you don't know the linking, you will not be able to correlate the things between these two chapters. So what is the link behind these two chapters we have? So you see what is happening. We used to calculate the cost of capital from the corporate perspective. What is the meaning of corporate perspective? Company perspective, industry perspective. Industry perspective means corporate perspective means from the angle of the company. From the angle of the company means companies are borrowing from the public, from the institution, from the bank, from the financial institution investor. And as they have, and you know why the cost of capital is very important for the corporate? And whatever, like student, those who have studied the financial management, for me, when we started the financial management in the first class, I told that we are not going to study the financial management, individual financial management. No, sorry. We're not studying in financial management any concept of personal finance. No. We're not studying any concept of financial management for individual person. And we are not going to study the financial management concept for small business houses. A small business, we can't say houses, small business, like this grocery wala, like this pan wala. We are not studying financial management concept for them, because they are not run professionally. So when we talk about, so we say, what is this you are telling, sir? There are a lot of individual firms are run professionally. You see this Ganesh Kachoriwala is running professionally. You see in Subhas Chowk, you have Subhas store, you have so many different stores. They are running it professionally. And they are a big businessman today. I don't consider they are a big businessman. I consider them as a foolish businessman. I consider them as a unprofessional businessman. Earning the money and happening of having a lot of millions of rupees does not mean that you're using the professional characteristic, the professional approach of doing the business. What does it mean? It means that a company or a business organization like Ganesh Kachoriwala, running for 40 years, because I'm personally seeing it for last 25 years, and even they are existing for prior to that. There is a Golgappe wala in the gully of the Sai Baba Mandir gully. They are also running for maybe 30-40 years, because I am seeing it them for last 25 years. I came here in Delhi in 1995, and from 1995 almost 25 years is over. Yeah, in between that, I was not here in the Lakshmi Nagar or Delhi for 5 years, because I was in Bangalore for when I was working with a government company as an accounts officer. So you're running the company or you're running the business organization for last 40 years, and you're not able to unlock your value. You're not able to maximize your enterprise's value. And you are still running your business firm either as sole proprietorship or a partnership firm or a Hindu and limited family or a private limited company. A private limited company is as equal as a sole proprietorship, because you can't issue the shares, you can't go to public, you have very restricted disclosure norms. So it is as good as, okay fine, you can make it public very easily if you're running a private limited company. But private limited company is as good as a sole proprietorship. So in last 40 years, you're not able to unlock your value. You're not able to maximize your value. You're not able to open different branches. You're not able to start your franchisee business. You have not to install any training institution for your employee. You have not patented your product. You made a very good kachori. You make a very good pav bhaji, and you have not patented your product. You have not patented your process. How this Mackie and KFC, they have patented it. And in 40 years, they have grown to some thousands and thousands, 10,000s of outlets throughout the world, and they have created a value of the $1 billion. So I consider them unprofessional businessmen, unprofessional business institutions. So I already taught to my student of the financial management in the first class itself that my dear student, we are not going to study in the financial management anything about personal finance. We are not going to study anything about this unprofessional financial management for unprofessional businesses. Our concern is about to learn the financial management for professional management. And where the professional managements are happening. But the professional managements are happening in the corporate sectors. And it's a two synonyms word. The professional managements are happening in the corporate world, and the corporate worlds are managing their activity with the professional approach. Because in corporate world, when hundreds and thousands of your few thousands of your employees or few lakhs of your employees are working, if you don't use the professional management approach, your unproductivity will increase in enormous way, and sooner or later you are going to become become obsolete. You are going to become bankrupt. So you have to use your professional approach of managing the business. And this we have learned in, again, the background story. These all stories starts in your life when you studied business studies syllabus in class 11th. What happens? What you studied in the class 11th of the business study? The forms of the business organization. And what we used to do? We never used to understand. We just used to learn, oh fine, this is a sole proprietorship, what is the characteristic, what are the advantages, what are the limitations, fine, एक question उधर से बन गया. Now partnership form, what is the characteristic, what are the advantages, what are the limitations, partnership form, then private limited company, and the Hindu individual family, then a limited company, their characteristic, their advantage, their disadvantage. When you try to understand, Baba, the biggest difference you have between the public limited company and between the other corporates, that other structure of the business, that they have got unlimited liability. Sole proprietorship, unlimited liability. Partnership form, unlimited liability to the partners. Hindu and individual family, unlimited liability to the karta. It is a business organization. When you run your organization as a public limited, your liabilities are going to be limited. So when you want to run a business of $1 million business and few millions of rupees business, or $1 billion business, or billion of rupees or business, and you're running in the form of unlimited liability, and if anything goes wrong with your business organization, oh my God, your lenders will sue you. Your lenders will sell your every property, and your next fine morning you will be sitting in the front of Delhi Metro, and you will be begging, and people will be laughing on you. What is this you see? Kal tak to ye billionaire tha, or today he is just begging in the front of this Delhi Metro. So none of the investors, none of the entrepreneurs, none of the professional management, none of the professional investor, none of the professional businessman will take this kind of risk. Sorry. None of the professional people. So what they will do, As soon as they want to increase their capacity, as soon as they want to run their business organization with the professional management, they will get registered with the public limited. But do you know what is happening? Why we don't get registered? Because it has got a lot of disclosure norms, which we don't want to do it. We don't want to disclose our wealth. We don't want to disclose our financing. We don't want to disclose our business. We don't want to disclose our operation. We don't want to disclose our mode of business organization. These are the main problems are happening with the Lala's companies in India. We don't want to disclose everything. We want to hide. Everything we want to do it with the black money. Everything we want to do it with the cash economy. We don't want to pay tax. We want to avoid the taxation. We want to do a lot of thefting of the taxation. Even we do the lot of malpractices in the taxation. We go with the wrong invoicing, and even with wrong invoicing, you see the height of the people that people go with the wrong invoicing, and they ask for the refund of the taxation from the government which they have not paid it. Oh my God! Can you imagine this kind of a regime of the taxation? Is any government or is any country is going to grow like a system which is happening with this kind of a structure, avoidance of taxation, no proper planning of taxation? You're not consulting to, you have plenty of millions of rupees, you have plenty of millions of dollars, and you're not contacting to any professionals, you're not contacting to chartered accountant, you're not contacting to cost and management accountant, you're not contacting to company secretary, you're not contacting to LLB people, you're not contacting to financial consultant, you're not contacting to any consulting firms. You don't want to pay the consultancy charges. My God, can you imagine this kind of a structure? This is how definitely you might grow. You might go from few thousand rupees to $1 million rupees of business, or $1 billion rupees, or billions of rupees of business. But what will happen to this country? Why so many poor people we are having in India? Why we are having so much unemployment in India? Because of these people don't want to pay the taxation. They want to work in the government, they want to work in this system, they want to earn from the society, but they don't want to pay back to this society. Whenever this comes about the payment of taxation, they will use so many wrong methods of avoidance of taxation, evasion of taxation. And even they don't give any weightage to the qualified people. People, those who are working day and night, they are struggling with their articleship for 3.5 years, and they are working for 4 and 5 years. Sometimes even the students, it takes 10 years to complete chartered accountancy course. Even some buddies are people are even completing in 15 years. Okay, normally students complete in 4 to 5 years. And they study so many syllabus, so many books. 100 of books, 100 of study materials they are studying, 100 of online materials, 100 of video lectures, 100 of face-to-face classes, and so many content of the syllabus. You see, in the content of the Indian syllabus, you have accountancy, you have financial management, you have law, you have business law, you have corporate law, you have audit, you have different accounting standards, you have IFRS, you have financial management, cost accounting, you have operational research, economics. After even studying those many subjects, people don't give the weightage to the professionals. They don't want to pay their professional fees to them. My God. They just want to pay the professional fees for avoidance of taxation, evasion of taxation, thefting of taxation, decatting of taxation. For good consultancy, they don't want to pay fees. You go and ask from the practitioners. They keep calling the clients, and they have plenty of money, but whenever the fees, the part of it comes that they have to pay the fees to the professionals, my God. They come with so many regions that I have this issue, that issue, this issue, that, and they have to understand this legal system, this compliance system is a burden on them. My God. You earn from the society and it has become burden for you. This big market is good for you. Having this much population is a good for you. But the professionals are burden for you. Consultants are burden for you. Payment of taxation are burden for you. Following disclosure norms are burden for you. Disclosing things are burden for you. Oh, horrible things. So, okay, fine, let us come to the point. That whenever we talk about the corporate structure, you get corporate structure, get registers. And now, if public limited compliances are huge, and if you want to go listed, compliances become immense. Because you have become public limited and you are going to issue the shares. And if the compliances process will not be there, the corporate governance process will not be followed, there will be again a lot of Harshad Mehta will come, Ketan Parekh will come. And they will steal a lot of money from the system. And they will spoil the system. They will spoil the image of the capital market. They have already spoiled it. They will spoil the image of our financial and capital market, money market, not only in India, in global economy. They will spoil the situation even in the global market also. So again, do you want, again you want a new Harshad Mehta? Do you want a new Ketan Parekh? Sorry. Very sorry. We don't want those kind of people. We don't want a person like V. Raju Rama Lingam, promoter of Satyam. We don't want. Sorry. We don't want a person like this Vijay Mallya. We don't want a person like this Nirav Modi and this Mehul Choksi. We don't want. They are just not spoiling the image of the country. They are just not spoiling the image of the banks. They are just not spoiling the image of the financial market, money market, capital market. They are spoiling the image of our country around the globe. And they are just floating the norms like anything. They understand that they are the king of frauds and they can do whatever they want. Something like dacoiting, something like thefter. They are dacoits, I am calling them. They are dacoits. They are as equal like dacoits of this Chambal. Only thing that the dacoits of the Chambal were unqualified and these dacoits are qualified, professional qualified dacoits available in the market. They float the norms like anything. They cheated the banks, they cheated the investors. They cheated the complete system. They cheated the government. They cheated the taxation system by paying some small amount of bribe. And what they did? They took their personal charter plane and they ran away from the country. And somebody is sitting in London, and somebody is sitting in Guyana and some other country. And they paid. There also they bribed. They are the small country. They have a lot of bribes. They have a lot of corruptions. They paid some money. They take the citizenship of that country. But are they going to get the same values what they got in India? Huh? Once the money will be over, those countries will kill these bastards. I'll tell you, those countries will kill these people. Sorry, I am using a wrong word, but I am very unhappy with this kind of situation. And we are like, our politicians are blaming this government and that government and this government and that government, and Congress is blaming to BJP and BJP is blaming. No, sorry, it's not required. All political party has to come together. How we are fighting our war, how we fought our war at Kargil, how we are fighting with the terrorists. What happened with the Kargil when we were fighting with the Kargils? What we used to do? We used to pay respect to every soldier. Whenever we used to see the soldiers going to the Kargil, we used to pay them respect to them. And the whole country came together. And like this, the whole country has come together. We are fighting with the terrorists. And we have to. Because even in those situations, if we are going to fight, the dialogue was used by Akshay Kumar in that Jolly LLB Part 2. Go and see that. It's a very good movie. And at last he said to that lawyer, what was his name actually? Because he took a lot of money to save that inspector and their groups for doing a wrong encounter. So he said, I've just forgotten his name, Srivastava or what. He said the same thing, Akshay Kumar, कि भैया ये 30-40 लाख रुपया दे दिया तो इसने जो है ये आतंकवादी को छोड़ दिया, ये 30-40 लाख रुपया कोई और दे देगा तो कोई तुम्हें भी मार देगा. So we don't do politics there. We come together and we have to. In the same way, we have to fight with these financial dacoits, qualified dacoits. And they have also spoiled their own career. It would have been better that they would have done the business with honesty, would have been done the business with less branches. And if they would have been done with the honesty and they would have been done with the proper disclosure norms of the business.